Good afternoon, everyone. My name is Timothy Lee, and I'm a mining analyst here at Red Cloud Securities. We welcome Marshall Koval, President and CEO, and Scott Hicks, VP Corporate Development of Lumina Gold. Marshall will speak to us about the company's flagship CANGREJOS gold project in Ecuador, where it is actively drilling and advancing toward completion of a pre-feasibility study. Marshall, you have 15 minutes, and then we'll have a 5-minute Q&A at the end of the session. And attendees, please feel free to ask questions using the Q&A link below. Take it away, Marshall.
Right, thanks, Tim. Thanks, everybody, for joining us today. I want to talk about Lumina Gold. Our only asset in the company is the CANGREJOS project in southwestern Ecuador, and we're advancing the largest primary gold deposit at CANGREJOS. Go ahead here and look at some forward-looking statements. Everybody's seen these, so I'll keep going. So the Lumina Group, Lumina Gold's part of the Lumina Group. Currently, the Lumina Group has 3 companies, Lumina Gold, LUMINA'S, and Strategic Resources. Lumina and LUMINA'S are both in Ecuador. Strategic is a vanadium brownfields project in Finland. The group has been together for quite a long time. I joined Ross in 2004 through all these different companies, primarily in the copper space originally, and then Anfield Gold was merged into what is Equinox Gold today. So I was CEO of that, also CEO of Northern Peru Copper, and then involved in all the rest of the group companies. So we raised about $275 million and returned about $1.6 billion to shareholders, and that was independent of the current companies. Let's talk about CANGREJOS. It's the 15th largest global development project. It's the largest primary gold deposit in Ecuador, as I mentioned. We have 10.4 million ounces of gold in indicated category and 1.4 billion pounds of copper, and then another 6.7 million ounces of gold and 0.8 billion pounds of copper in inferred. In 2020, we completed a PEA. It showed a large production profile of 366,000 ounces average per year over a 25-year mine life, with low AISC net of copper byproduct credits of 604. And we used $1,400 gold and $275 copper, and that gave us a $1.6 billion NPV at a 5% discount rate. If you look at the 20% up case, it gives you a 2.5 billion NPV at 1680, and then if you come close to spot today, you're up over 3 billion NPV. So the project has a lot of torque to upward movements in both gold price and in copper. Currently, we're advancing the project to a PFS, as Tim said. Just run you through really quick through the corporate structure here. We got a market cap of about 220 million. In October, we have 14.4 million US in the treasury. That'll get us through the drilling portion of the PFS. Right now, we have 7 drill rigs in the field, and we're advancing the drilling. Hope to be done with that in July. The 52-week trading range is between 50 cents and 90 cents Canadian. We've got coverage from Haywood and Raymond James. Ross Beatty controls 22% of the company. Ecuadorian Entrepreneurial Group has 18. Management and the board 9. Route 1, a diversified investment fund in San Francisco, has 6.8. You can see our trading record on the right on the stock chart there. You can take a look at that later at your will. Ecuador has really advanced since we started working there in 2014. It had a sort of a punitive fiscal regime and regulatory regime at the time. Wood Mackenzie came in and helped them reform the code. And subsequent, if you bring it forward to today, they've eliminated the windfall profit tax, lowered the royalty range, and you get VAT back once you start construction now. And the current government, President Lasso, has been a big supporter of the mining sector and put out a national mining action plan. Long and the short, in 2019, 2 major mines were built in the country, Fruta del Norte of Lundin Gold and the Mirador mine of Tongling Mining and China Rail. These 2 projects have brought quite a bit of revenue into the country, and today the mining sector, along with all the exploration companies, has contributed about 4% of the GDP. 2014, it was close to 0. It's one of the last really unexplored, systematically unexplored frontiers in the Americas. It's got the same geology as Chile and Peru, and it's attracted all these major copper producers and gold companies like Newcrest, Silver Wheaton, Dundee, and Franco. Let's talk about CANGREJOS a little bit. It's had substantial amount of drilling, sort of over, right now with our drilling that we're currently doing, about over 70,000 meters of drilling. It's got really good infrastructure, close to power. Port facility, Porto Bolivar up here is where the Mirador mine is shipping their concentrates all the way across the country, some 300 kilometers. We're about 40 kilometers from it. We have paved roads to the site, ample water. The project anticipated initially a 40,000 ton per day operation, ramping up to 80,000 ton. So there's water for that. Lower elevation for the Andes, 1,300 meters at the upper elevation, no communities on the site. The closest community is 7-8 kilometers away, and we have good relations with that community. Some of the most questions we get about CANGREJOS is, does it have scale? Yeah, it's the 37th largest primary gold asset in the world by resource side in all categories: producers, developers, explorers. The 12th largest undeveloped primary gold deposit by gold production capacity. What about the grade? Measured and indicated resources, about 0.73 grams per ton gold equivalent, or if you look at it from a copper equivalent, about 0.5% copper. So recently, big milling projects that are lower grade like this, big porphyry deposits, which CANGREJOS is a gold copper porphyry. Porphyry deposits like Cobre de Panama, Mount Milligan, Red Chris, it benchmarks pretty well with those. What about the CapEx? The initial capital for the 40,000 ton per day is $1 billion. That type of CapEx has been deployed in the country already. Mirador was over $1 billion and Fruta was under $1 billion. So like we mentioned earlier, we're advancing the PFS. And I think one of the main things with the PFS, once it's completed, it allows you to work with the government to get a term sheet or negotiate a term sheet for an investment protection agreement. And that'll allow you to do the feasibility study with all your tax, royalty, and all the different taxation and regulatory stuff in place when you go do the feasibility study. And then it puts you on the track towards your exploitation license. CANGREJOS has two pits, Gran Bestia to the left up here, and CANGREJOS. CANGREJOS is the bigger pit with more of the indicated resources. We developed the pits in the mine plan of the 2020 PEA with a $1,100 pit limiting shell. Right now, we're infilling that pit limiting shell for both deposits, but we're also drilling in these open areas to step out at Gran Bestia and the same at CANGREJOS. This cross section here is Gran Bestia. This was the last hole we had in the PEA. And right now we're drilling this direction and trying to extend the deposit. We know the mineralization exists at the surface. What that'll do is add potentially more resources. And if they're above the cutoff grade we ultimately use in the mine plan, it should lower the stripping ratio, which is quite low to start with, 0.8 to 1 at Gran Bestia and 1.1 to 1 overall for the entire CANGREJOS project with both deposits. There's upside exploration potential. We've only tested a portion of the area that has mineralization. This green line is the 0.25 gram per ton soil anomaly. So there's a lot of area to continue to test, a lot of upside with deposits up in these areas here. So if we look at the PEA, basically in years 1 through 5, we're looking at about 270 ounces per year of production, and then ramping up to 80,000 ton per day production in years 6 through 25. You get up to almost 400,000 ounces a year, and 50 million pounds of copper as well. And life of mine, it's 366 and 46 million tons. Initial capital, $1 billion. The expansion is going to be done with cash flow, and that's $454 million. And I already mentioned the NPV previously. So let's go on to the next slide. Metallurgy looks really good. 82% recovery for gold and 84% for copper. Right now we have a full engineering team in place. We're doing trade-off studies, looking at the flow sheet, trying to optimize both capital, operating costs, lower those, and look at a higher gold and copper recoveries. So all that work's ongoing. There's multiple trade-off studies. So we hope to improve this slightly, maybe get gold up around 84% recovery and silver closer to 90. Here's the layout of the project. You've got the CANGREJOS pit, Gran Bestia pit. The primary crusher will be built to 80,000 ton per day initially, and then conveyed over to a plant site, waste rock storage facility, and then we went with a dry stack tailings option here, and basically you convey the tails up to the dry stack facility. We're also in the pre-feasibility going to look at conventional slurry tailing sites, so it give the operator who will eventually build the project the option to select the tailings storage method that they suits their operating plans the best. The company's business plan is to add value, de-risk these large projects, and move them on to somebody that would build them. Just some benchmarking here. You can see how CANGREJOS fits in. All of the blue ones are projects that are can produce over 250,000 ounces of gold a year. And the blue ones are the ones that are controlled by majors or mid-tiers, and the yellow ones are independents. And you can see CANGREJOS is the 5th largest primary gold development project controlled by independent. This is just some benchmarking. I urge you to go look at our website, and you can look at this in a bit more detail. I'm on the board of Equinox Gold, and we're building the Greenstone project here. So this project falls in pretty good shape with a lot of these projects that are being built right now, like Cote, Regino, Greenstone. And one of the interesting things is, you look at equivalent gold grades for CANGREJOS, and it's one of the lower equivalent gold grades when you benchmark it against these projects. But when you look at the real low stripping ratio we have, it becomes one of the better looking projects from a mine planning perspective. It goes from the very bottom over here, and the strip is so low, so you're moving less material, so your mining cost per ton of ore delivered to the mill is quite a bit lower. So this is a positive for the project. And then if we look at PNAV valuation matrix, the Western developers are trading at about 0.38. If you look at Ecuador, there's a discount for Ecuador. Sol Gold is trading about 0.25, and right now Lumina Gold is trading about 0.67. So we think there's a lot of upside to an investment story here. We think obviously we're undervalued. Every CEO will tell you this, but when you look at these metrics, it becomes pretty apparent. And then I think one of the other things where we can look at the value disconnect is since 2017, when we first put out the first 4 million ounce resource on the project, we've grown the resource over 4 times. Gold's gone up over 50, roughly 60% over that time. And our share price has only gone up 7%, including all the financings we've done to advance the project. You know, social responsibility is kind of a cornerstone to us being able to work in the area. It's a cornerstone to everything we do. Through the COVID situation, we became much closer with local communities. We did a lot of work with them to provide them sanitation and food. We worked with them to get logistics. We educated them on COVID, and the government was in the area, but we were more or less a de facto provider of health services to them. We continue with environmental programs, reforestation, education, entrepreneurship. We built a really large greenhouse in the community, and they're able to sell excess produce to the local market. So really, this is and the greenhouse is interesting because it's run by the elderly women in the community. And here's a few pictures of some of the work we're doing. Besides the greenhouse, we support youth soccer, a lot of other things in the community. So really just wrapping up here, since 2018, we showed a large-scale profitable project at $1,300 gold. We successfully drilled 40,000 meters. We doubled the size of the resource at the project again. We released an updated economic study in June of 2020. And that study, like we talked about earlier, showed a $1.6 billion NPV at $1,400 gold, over $3 billion in NPV at today's commodity prices. We also increased the mine life from 16 years to 25 years. And right now we're advancing the PFS study. Right now the drilling looks like it'll be completed somewhere in the July timeframe. Metallurgy will be going on roughly about that same time. And then we hope to have the PFS completed at the end of the first quarter of next year. So the team has a successful record of monetizing large-scale assets, and that's basically the business plan. So with that, Tim, I think I'd like to open it up to questions.
Great. Thank you, Marshall, for the thorough presentation. We'll now open up to Q&A here, and we do have a couple of questions. Looking at the staffing side of things, do you have the right mix of staff, or will you need to add some skill sets at some point?
No, we're in really good shape. So right now in the field, we have in country more than 20 really seasoned geologists, a lot of senior guys that have 30 years plus, and they're kind of overseeing the project. They're overseeing the field logistics and the core logging and that aspect of it. So we're in good shape there. We have, you know, a lot of owners on the owners rep side of the PFS. We've brought in experts in the tailings area, in metallurgy, and mining that augment the current corporate team. Myself, I have a lot of experience with mine development, construction, and operations. So I'm intimately involved in this. So I think we're in really good shape with all this work.
Great.
One more thing, Tim. I think the fact that we have 7 drill rigs going right now, we use all man portable rigs. We use the community to help us with labor. We have quite a few permanent community members working for us, but while we're drilling, there's quite a few jobs that the local communities around us are able to help us with moving rigs around and preparing drill pads, that sort of stuff.
Great, great. And kind of a different kind of question here, but talking about the Lassonde curve, obviously the valuation of a company over time from exploration toward production. Do you think the Lassonde curve has validity? And if so, where do you think you sit on it?
So yeah, I think it has validity. And if you look at, we're in that development cycle now where we're de-risking the project. We're moving through pre-feasibility studies. So initially when you have discovery, you get a nice spike in things, a lot of interest. As you move the project along and de-risk them, they kind of come back down the curve and you're sort of in a valley. As you get closer to construction and commissioning, you start to get PNAV ratios that are more in line with other producers. So we're down in that trough right now. And I think that's another good reason to look at the company from an investment perspective. Great,
great. And then looking at the drilling, obviously you are actively drilling. What are can you elaborate a little bit on the targets, and are there higher grade areas that you're looking for, and what all are you looking to add?
So when we did the PEA, I mentioned this earlier, we used $1,100 gold as the pit limiting shell, and then we're infilling within that shell. And, you know, we used a higher cutoff grade calculation of $1,300 gold. So we're still infilling in that $1,100 shell, and we're stepping out on the edges where I think we can add some value. And that goes back to the cross section we were showing here at Grand Bestia. This area, I think there's some potential value we can add to it because it hasn't been tested. We know mineralization continues. And then in these open areas, so we'll do a little bit of step out drilling. The thing's open at depth, and you can really see that in this here. This is the bottom of the resource pit, but you can see most all of these holes ended in mineralization. Yellow and red are good. So, you know, it's got that depth potential as well, although that's not the scope of the project at this point. It's future upside to the project.
Great. And we have one other quick question here, but obviously it asks about NDAs. So you can't disclose the what's in an NDA, but are you in discussion with potential buyers of the company?
Hey, Scott, I'm going to throw you a bone. You can answer this one.
Yeah, you know, we started signing NDAs after the 2019 resource came out. So there's, yeah, certainly in the double digits of groups that have signed NDAs and have looked at or are currently looking at the project.